Good morning, everyone. This is Mike Minter with Financial Synergies, and this is October 9th, the morning of, and we're covering last week, October 2nd through the 6th. So this is your market in minutes. So let's jump right into it. What happened on Wall Street last week? So ended up being kind of a mixed week, although looking pretty good on the NASDAQ side. So we had the Dow Jones tick down just a little bit. S&P 500 was up about 0.5%. NASDAQ, as we said, was up pretty nicely, which is kind of surprising given the events last week, but we'll talk more about that. And then these are the overseas, so foreign developed markets, MSCI, EFA, down about 2%. Rough week for foreign markets. So let's talk a little bit more about all this as we go through. But year to date, still looking very, very good. Dow Jones still firmly positive, although not nearly as up as the broad markets. S&P still up almost 14%. NASDAQ very strong at 30%. Hard to argue with that. And even the foreign markets, just generally speaking, have been pretty positive for the year. So up almost 6%. So let's talk about kind of the developments of last week and some of the economic factors as we move through. So we had a Friday rally, which was nice, which is also a little surprising, but excuse me, I'm battling a little bit of a cold here, guys. Sorry about that. So let me get my laser pointer at her. So stocks rallied Friday after strong employment report, stronger than expected. And so this initially, generated fears of further rate hikes, leading to a spike in bond yields and some pretty steep losses initially. But then things did turn around as investors focused more on what was kind of a moderate wage growth. And we've talked more about this, where the employment situation has kind of been a thorn in the Fed's side. It's so strong that it's been driving inflation. And so what probably should be seen as a positive, strong employment, has actually been a negative for the economy and not what the Fed wants to see in terms of taming inflation. But we did see moderate wage growth indicative here, which was a positive. So stocks were shaky much of last week on rising yields. Rising yields continues to be the story. So when Treasury yields hit their highest level since '07 on Tuesday, stock prices got hit pretty hard, pummeled, so to speak. So not good. But the catalyst for the spike was this, surprisingly strong. We've talked about JOLTS, this job openings and labor turnover survey. It's something that's reported on occasion, and it was very, very strong, showing nearly 1 million more open jobs than investors had expected. So continuing to battle this really strong jobs market is kind of first and foremost right now for the Fed. So let's talk about the economic factors. So this just leads perfectly into what still remains all about jobs and rates, and they're kind of hand in hand. But the labor market remains resilient. This JOLTS report we just talked about showed job openings over 9.6 million, and that was way above the consensus of 8.8 million. So that's where that kind of surprise came into play. Friday monthly employment report showed strong gain of 336,000 new jobs, and this was nearly double the consensus forecast of 170,000. So previous 2 months saw significant upward revisions of 119,000 combined from initial reports. Wage gains rose modestly. This again was a positive, and I think this is the reason that all in all still ended up being a positive week, which is a good thing. But the wage gains were modest, coming in below expectations. So that did strike a positive, a hopeful note on inflation. So that's where that was coming from. So normally we would just move on to what's up next, but I'd be remiss if I didn't talk about this situation overseas. So obviously what unfolded over the weekend is horrific. Israel now at war with Hamas. Hamas taking credit for the attack. I'm not going to get into the political aspect of this whatsoever. This is obviously horrific from a human standpoint, and none of this is meant to to downplay that. We'll be hearing more and more about this over the days and weeks and who knows, months to come. It's impossible to say, but it's a major geopolitical event. Things are developing rapidly. I think goes without saying. If you turn on the news today, it's all over the place and pretty much all anyone is talking about. I do know that, and I apologize if you guys are seeing this meeting request here. Sorry. I do know that these things develop very rapidly, and it's impossible to predict what's going to happen next, especially in the short term. What's most important is that we stay in our seats and don't try to react to what's going on, because it's going to change daily. It's going to change by the minute. I would expect market volatility, which we're seeing now, although it's been fairly muted from the market standpoint. I was expecting probably a little bit more downside, which could very well happen today and throughout the week, but right now fairly muted as I record this. The other thing I think you can expect, and we're already seeing, is wild swings in the price of oil. It's already hit. I mean, oil has spiked quite a bit. I don't know where we are exactly now, but this morning it was up. I think crude was up almost 4%. So some pretty wild swings. Anything that occurs in the Middle East is going to have some pretty wild swings in the price of oil. So that's happening. And then we also know that, again, not downplaying at all the human event here and just toll. But these geopolitical events, they tend more often than not to create opportunities in the equity markets, displacements, temporary shocks and downturns, in buying opportunities, honestly, in the equity market. So important to let this play out. Obviously, we'll be watching it and reporting on it as things unfold. Horrific to see things like this. It's terrible. War is never a good thing, and I feel for everyone and their families directly impacted by this. It's horrible, but that's really all we have on it right now. We're watching it just like you are, but I just wanted to think I'd be remiss if I didn't mention that. So, okay. So what's on deck for this week? So key economic data. So Wednesday, producer price index report, in FOMC minutes, Federal Open Market Committee. This will be interesting. We'll be watching that closely and reporting on it. Thursday is the CPI, Consumer Price Index, inflation, and jobless claims. Friday, consumer sentiment, companies reporting earnings. So Thursday, Delta Airlines. Friday's a big one. JP Morgan, United Health Group, Citigroup, Wells Fargo, PNC Financial, and BlackRock. So a lot of financials going on Friday, other than United Health. So we'll be watching all of it, and of course reporting back to you next week. So hope you guys have a fantastic week, and we will report. I may be sending out more communications this week than usual, simply based on what's going on in the markets and it being the start of the new quarter. So we'll be reporting on last quarter, all those things. So I don't mean to bombard you, but maybe getting more than usual. So thank you so much, guys. As usual, reach out with any questions, concerns. We're always here for you, whether you are a client or not, or interested in what we do. Here is our information. Contact us any way that you see fit. Phone number, website, email address. Follow us on YouTube. If you follow us on YouTube, you'll get all of these videos as they come out. Sometimes they're blogged out, sometimes they're not, so you may get some information that you don't normally get. But please reach out with anything that's concerning to you. Here is disclosures of all of this stuff, some light reading for you. And guys, I hope you have a great week, and we'll talk soon. Thanks so much.